The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. And when we talk about our code, we talk about choice, organization, direction, and education. Anyhow, today, we help hundreds of advisors across the United States in the areas of life insurance, long-term care, annuities, disability, and life settlements. And that's our areas of expertise. And we were fortunate enough last weekend to be invited to speak in front of a group of real estate investors who asked me to talk on infinite banking strategy. Curiously enough, infinite banking strategy is all over the internet. A lot of younger people are approaching me, a lot of small businesses, a lot of real estate investors, and it's a strategy. It's not a product, it's a strategy. And I really wanted to uncover the myths and the pros and the cons, and we really got into it, and I was very fortunate to be asked and very happy to educate the group on what it is. One of the curious, interesting, or wonderful things about real estate investing, it is an incredibly tax-favored way of doing investing. There are so many regulations with the IRS that allow you to buy and sell real estate, and whether it be commercial or residential or renting out. And it is a terrific way, whether you're flipping houses or leveraging property. There are so many great ways, and the government has been very favorable tax-wise. As a matter of fact, many of my very high net worth clients own significant real estate, and that's how they gathered their wealth. It's either they gathered it through real estate or they gathered it through the market, mostly, or it's a combination. I would say mostly, though, the high net worth have a lot of real estate. It's just they know how to, buy, sell, and take advantage of a lot of the tax codes. They're also very big into this infinite banking concept, as are a lot of small businesses, which involves usually whole life. And the way it works is very simple. The other product that has a lot of tax protection is life insurance, just as much, if not more, than I think any other existing thing in the universe. So it works hand in hand with real estate investors and small businesses. So this infinite banking concept, and they have blitzed the internet. And the funny thing about concepts are they can be wonderful, but then taken too far by some people, and then they get tainted. I haven't heard too much taint, but some of the insurance companies that went awry, and like many things do. The whole concept is buy a lot of whole life insurance up front, put up a lot of money up front. Some of it is going to go through for the cost of insurance, but the rest of it's really going to be cash. And what's nice about using these whole life concepts is when you want to buy another piece of property, or you want to buy particularly for real estate, or you want to have a business venture, you can take not your money. The insurance company opens up the equivalent of a line of credit for you based on the money you put in and the dividends that have grown. And you call them up and say, I want $50,000, I want $100,000, and they just give it to you. It's their money. Of course, you got to put money in up front. It's not like I put in $100 and, hey, give me $100,000. It doesn't work that way. The interesting thing about it, and the powerful thing about it, is there's no 1099s. There's no question. Here's your check. I don't have to go through a whole application process. I need that money because I want to buy that property tomorrow. And the beauty about it is that money you loan from that contract that the insurance company gives you as a credit line, whatever you have in that contract is still growing interest. It's a non-recognized loan. Let me repeat. The money in that contract is still growing interest or growing dividends. A good whole life company is paying you solid dividends and has guarantees. So if I have $200,000 in the contract basically, and I've borrowed out $100, that $200 is still growing. Yes, there's an interest factor on that $100. You don't have to pay it right away. You can pay it back when you want. So the really strong investors will pay it back after they sell something. They'll pay that loan back, and then they'll walk around and buy something else, and they'll borrow from the contract again. Their money is still growing in the contract. There is some interest, but the dividends on that total amount is typically greater than the interest you're being charged for your loan. Again, you get no loan calls, no this and that. What a beautiful thing. So we have a lot of real estate investors that have bought into this concept. The concept is liquidity versus growth. That's the financing challenge. Anytime you're looking to buy something, you need to have liquidity and you need to have cash flow. So by borrowing from the insurance company, that money, you can continue your regular cash flow, your regular job, your regular business, and not utilize other assets and tie up other assets. It's a potential for tax advantage growth. And the beautiful part about this, when it's all said and done, you can take the money out tax-free because it's inside a whole life contract. What a marvelous thing. So you get asset protection. You have a death benefit. That's your real protection. It is life insurance. Not everybody can qualify. Okay, it's not for everybody. And not everybody can qualify for health reasons or other reasons. It does give you asset protection. It does give you estate planning support. It's that another tax-free asset you have there with a death benefit, which is usually much greater than the cash you've put in. And then once you've paid the loans back at the end of the day, people are using it as a tax-free retirement vehicle. It is a multitude of advantages for doing it. This way you keep your long-term assets compounding instead of selling properties. You need quick access to capital for rentals, for renovations, fix-up opportunities. It's there. You need to preserve retirement savings and avoid disrupting the broader wealth plan. It's there. You want flexibility rather than delays, underwriting delays, closing costs, and lender restrictions. It's there. Typically, a bank loan could be 6 to 8%. A hard money loan could be 12% and can erode your deal profit very quickly. Selling assets will reduce your long-term growth. And, taking out a personal savings can drain emergency reserves and flexibility. Now, I went through these 14, 15 people, and we talked about it. And they were all different ages. They came from Manhattan. They came from Long Island. Two people were from Connecticut. And they had, question after question after question. One gentleman was putting all his money in Roth IRAs and backdoor Roths. And why not that? Why not that? Well, the problem with loading up on a Roth IRA, and I love Roth IRAs and I love Roth 401ks, and loading up with that is you can't liquidate them without penalties. Yes, you can take your money out tax-free when you retire. Yes, there is some small exclusions, but other than that, it doesn't have the liquidity of a life insurance contract. So while it's a great long-term investment other than real estate, and like I said, everybody is different. Everybody's situation is different. Everybody's health is different. Everybody's family needs are different. this is just an alternative. And I wanted to throw it out there because you may be reading about this concept and you want to come to me and we can discuss it in greater detail. You're listening to the Main Street Code for Financial Success. I'm Neil Himmelstein, and I'll be back in a minute. The number to reach me is 631-647-4694, and we will be right back. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and before the break, we were talking about this infinite banking concept. You know, I've had lots of people call me about this because they're looking on the internet and they're looking for ways to make money and do things, and it does have some merit. And typically, traditionally, it's been used with whole life insurance. And I'd mentioned why you can borrow against it, use it for liquidity. But there's another aspect that we didn't touch base on, and we're going to come back to it. You can buy, with this contract, a disability waiver of premium. What does that mean? So, we have many people, whether they're doing infinite banking or not. You know, I don't have a ton of infinite banking clients. I have a couple, but not a lot, only because it's a concept. And it's basically a concept similar to many other things. It's just a concept. But anyhow, one of the things you can buy with whole life particularly is a waiver of premium. And what that means is if you become disabled and you're using this for a retirement vehicle, they will pay whatever premiums you have designed for you. So if you said, you know what, I'm going to use this as a retirement vehicle and I'm going to pay $10,000 a year, for instance, or $50,000 a year, whatever the number is, okay? And contractually, I'm going to pay that for 10 years or 20 years. And 2 years from now, like I have clients like this, you develop MS or some other thing where you become disabled. The insurance company will continue making those premium payments for you, which means they will build up your retirement for you at no cost to you. So even while you're disabled, maybe you can't work anymore. You've got a big pot of money building for you because you planned it out. And I know people that haven't paid premiums in 15 years. They've accumulated hundreds of thousands of dollars inside a contract. And they're not even working because they became disabled and they bought this waiver of disability for a little bit more money. And it is a very powerful thing. Your advisor should be telling you about this. There's too many people that don't talk about disability. Disability is one of the things that can stop you in your tracks. It could stop you from working. It could stop you from making money. It could stop you from living your fullest life. It can stop you in your tracks. But wouldn't it be great if somebody would pay you for your retirement for you? An insurance company? I think it's a huge thing to do. Anyhow, I diverge. You can also buy something for a long-term care rider. Something that will, hey, just in case down the road I might need long-term care, I can have a policy that will draw from the death benefit long-term care. So you know what? I don't need this death benefit per se that I built up, but I do need long-term care. When you structure these infinite banking things, the policy death benefit goes up all the time. You're buying more and more insurance. The downside is, let's say I take out a major loan out of that policy. What would happen if something happened to me and I was deceased? Well, they would take that total death benefit and subtract whatever your loan amount was. That's how it works. So if my death benefit has now grown to $1 million and I've taken out $100,000, then it would be $1 million less $100,000. It'd be $900,000 still left to my heirs, even though I just took out this chunk of money from my policy that the insurance company loaned me. So they get their money back. Here's where things could go wrong and have. Let's say you take large sums of money out and you never pay it back and you never pay the interest. And as time goes by, and times goes by, maybe your policy erodes somewhat because there's a little internal factor called the cost of insurance. And if that thing erodes to the point where you're upside down and you let that policy lapse, insurance company says there's no money in this policy to keep it going, you may have a hidden tax that you are not aware of. I'm letting you know that tax is scary. Because all of a sudden, oh yeah, I took the money, I took a couple $100,000, great, I'm going along. What happens? Well, you know what, let me let the policy go, and then all of a sudden you get a letter from the IRS, you owe us, you get a 1099 for all those dividends that you earned all those years. They give you a tax statement. So even if it wasn't that you took out a loan, let's say you said, you know what, I'm going to stop paying premiums. They take the money that you would have taken premiums from the cash inside your bucket and pay for the policy for a certain amount of time until there's no cash in the policy. If that cash runs out on your policy, you have a problem. Now, I have worked with several clients and done loan rescues where people are upside down in their policy, and I really want to rescue this. How do I do that? Well, one of the ways we rescue, there's two ways. One is you can go to, there are banks, there's a couple of banks that still do it. I think there's one or two in the country. There's one here in Long Island that does it. That will take your loan, and by the way, anytime you have a life policy, you can use it as collateral. People don't realize that. I can use this as collateral. This is a living instrument I can use to borrow money against. This is a living instrument I can secure a loan with. So anybody doing infinite banking or any of these other concepts can do that with their policy. It is a collateral. It is a real piece of property here. This is why I tell everybody, look at what you have. Make sure if you have a loan, it's not going upside down. So you have policy, somebody told you a long time ago, just pay a couple of years and you don't have to pay anymore. All of a sudden, you're 70, 80 years old and you haven't thought about that policy and it's underwater. There's no more cash in it and it might lapse. Well, here's some of the things we can do. One thing is we've done what they call a loan rescue. We have other insurance companies that have a different chassis than a whole life chassis. They have, let's say, a universal life chassis or an index universal life chassis where possibly the cost of insurance is much less expensive. And the loan rate inside their policy may be much less than the loan rate on that old whole life, which may be 8%, let's say. So they will take over the policy and you do a transfer, 1035 transfer, and yet they will take over the loan in that transfer. And in so doing, we have rescued policies to where they don't have to pay anymore, and yet the loan can get paid off because of the lower cost of insurance and the lower loan rate inside the universal life policy much quicker from actually inside the internal cash that you had built up inside the policy. It could be paid off and you could be clear free and have the insurance. So that's one way we've done it in the past. We've also refinanced it. And then there's other strategies to negotiate with the insurance company on how they do the loans. Sometimes they'll do a variable loan. Sometimes they'll do a fixed loan. You really got to look into the policies and determine what's the best course of action to take care of this loan. Even if it doesn't have a loan. We have a lot of old whole life policies that have a lot of cash in it that was intended for retirement, and then people really don't need it, but they want the death benefit, but they don't want to pay into it anymore. A lot of times we'll convert those into a universal life policy. So again, there's always options, but you need to talk to us so we can go through all the options that there are. Now, there's another product they use for infinite banking. It is now worth, oh my goodness, I'm running out of time, where people are using Index Universal Life for infinite banking. Works on the same basis, same chassis, different product chassis. We can go into that in detail when you give us a call at 631-647-4694. If you miss an episode, visit me on YouTube. Go to themainstreetcode.com, check out my episodes, Apple, Spotify, if you're driving in your car. Thank you. Have a wonderful weekend. Have a wonderful day. Thanks again. Bye-bye.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.